Hello and welcome everyone to our Charlie Mike series sponsored to us by our generous donor, BAE Systems. I'm thrilled today to introduce you to John Hale III, who is the CEO of the Cornerstone Group. And John is going to share with us a series of 5 discussions on all things capital. And so, John, I'm very much looking forward to this series,
Yes, so am I.
and learning about, how to empower CEOs on all these topics of capital. And I know that your next slide shows us the various topics. And so, as everyone can see, it is totally going to be focusing on preparedness and accessing capital and partnerships and revenue generation. And then those pearls of wisdom. Some of you may not know that John was the OSDBU director for the Department of Energy under the Obama administration. And so we're going to get some of those pearls of wisdom from you too, John, on, hey, how to go about, getting the OSDBU to advocate for us, the business owners. And so with that, John, I'm going to kind of turn the presentation over to you. Again, we're starting with the capital partner preparedness and identification session. So this is the first of 5.
Marie, thank you very much. We are excited to be here and to be able to share this information and knowledge with the National Veterans Small Business Coalition. I've had a chance to speak at a conference before and work with the organization while I was the OSBA director, and it's a fantastic organization. And so we'll continue today. Again, as Marie had indicated, today's the first of 5 sessions titled Capital Partner Preparedness and Identification. In short, how do you prepare for a capital partner, and how do you identify what are the different types of capital partners? And so our goal here is to help CEOs and entrepreneurs to grow and scale your businesses. So the number one lesson we want to talk about is build trusted relationships. We'll talk a lot about institutions and organizations, but all institutions are made up of people. Building those trusted relationships is critical for your success. And so trusted relationships, as it relates to the institutions, um, we all know this adage we've heard before, but that people do business um, with folks that they know, like, and trust. So how do you get to know people? Putting your best foot forward and developing a sense of trust. And that other lesson here is when you say you're going to do something, do it. Follow through in high quality, like you've always done, and then that will start to build trust and you'll separate yourself from other people. Okay, so here we're going to talk about the follow through and the continuation of build trusted relationships. First, you need to cultivate and nurture relationships with loan officers and investors before you need them. So we're not talking about a specific bank, or we're not talking about a credit union, or we're not talking about a specific high net worth individual family office. Who are the people? Identify the people that you need to get to know, and they need to get to know you because they make money by investing and loaning money to strong businesses. And so they need you as much as you need them. So before you need them, make time to go out and introduce and meet these individuals. And then
So
secondly,
John,
yes,
so John, there's a question that
sure.
that I would have is, when the loan officer or the investor, aren't they just looking at your balance sheet or your financials? And how do I go about getting to know them before I need the money? We get those kinds of questions.
Sure. No. Yeah. Yeah. No. No, thank you, Marie. That is a great question. So the answer is they're going to invest in your business as well as your financials. So part of the business is yourself as a CEO and your management team, and who are the other key personnel and key players in your business. So it's more than just the balance sheet and the financials in front of them. They're going to want to look holistically, not just at the financials, but the business and the leadership of the business. So that means that that would include your financials, but also your business plan and your business strategy. Answering 2 basic questions: why do customers hire you, and what differentiates you from your competitors? So they're going to want to get to know you personally as a CEO, but also other key personnel of your company.
And so
And
do I, as the business owner, kind of make an appointment with the loan officer to introduce my company to them to say, hey, this is who I am and this is what I do, and kind of do like a little fishing expedition, so to speak, about
sure.
what do you offer? Is that how I approach them, or is there another methodology that I should, as a business owner,
Mhm.
follow?
No, another great question. So what you should do, and it's part of what we'll cover today, is make sure you're ready before you're meeting with them. So there's the formal meeting, which could be, again, in both cases, you want to be prepared in terms of have your business plan, your business strategy, and from a loan amount, or if you're looking for people to invest in your company, how much do you need and kind of why do you need it and what's going to be used for? So those questions you should have. So formally could be, yes, making an appointment at the bank to see them, or could be meeting investors and bankers and loan officers outside of their particular day-to-day job. So that would mean trade organizations such as the National Veteran Small Business Coalition, local chambers of commerce, in the government contracting arena. Look for these institutions and these individuals that may sponsor different events. So get to know them in the community, in the business community, because they're out networking looking for you as well.
Okay.
So trade organizations, business groups to join and be a part of. Again, as part of you building uh, your network as well.
Okay, thanks. Great,
Yeah,
great
definitely.
information.
Oh, great, thank you. And the second part of that is even if you already have your customer of a bank, if you're already a client, already have investors, continue to you know research, network with other lenders and investors. You want to currently be loyal to them as your bank and the people that have invested in you, but also your ultimate loyalty is to your business, to your company, to your employees, and your customers. Particularly coming through the cycle with COVID and the various loan programs that were out there with the PPP, for instance, and et cetera. That's just one example where I had clients and other business owners that I knew in my network that were longtime customers of the bank, but they couldn't get their loan processed right away. They found out the hard way, even though they had been there 5 or 10 years, they were not a tier one client. So that's really so ultimately your responsibilities to your company. So don't be afraid to continue network with other lenders and other investors as well.
Okay,
Those are great questions.
okay,
And so what I wanted to do here, just as we talk out, just as we start, excuse me, would be, what are the top reasons for business failures? We're here to talk about success in growing your businesses, but we want to also identify here's the potholes that you want to miss. And so we've broken this down to two categories. One will be small businesses, and other will be middle market businesses, and particularly in the government context, government contracting context, excuse me, we would think of middle market businesses as the other than small businesses, the larger ones that have graduated from their size or their revenue cap several years ago, and they're continuing to grow. And a small business would be your small business based upon your NAICS code and your size standard by the federal government. So you'll see some overlap here, but in the small business failures, lack of cash flow, market demand means there's demand for your product or service. Poor management, how well are we managing and executing the business day to day? Insufficient planning, not going through some of the steps we're talking about today. And over expansion, you can actually grow too fast in a small business scenario, that you're just expanding so much that you can't meet your current customers as well as the new customers' services and needs that they have from you. And so cash flow, 82% of business failures relate to a challenge of cash flow. You just don't have the cash flow to support the business, the staff, the company, the overhead, and market demand. 42% of business failures are attributed to insufficient demand for products. That means the customers are buying what you offer from someone else and not from you. In the middle market scenario, somewhat similar. Financial management, how we're managing the finances of the business in terms of cash flow, staff, customer acquisition costs, etc. Failure to adapt and innovate. You're a little bit larger. You're swimming in the deep end of the pool. You have more sophisticated competition. So we need to be innovative. We need to be innovative as it relates to trends. Leadership and cultural challenges. It's one thing to start and grow an organization. It's another thing to start leading that organization as a CEO and a management team. What does that look like? Are the people and the team that you had as a small business, are they capable to manage day to day and grow a middle market company? Over reliance on key clients. We may have an over concentration of over 50% or two-thirds of our sales and revenue from just a couple of customers. And lastly, misaligned marketing strategies. We may not be meeting our market, meeting our customers where they are, and therefore they can't find us and we can't find them. So these are just some of the reasons or top reasons for business failures I want to share to you. And now we're going to jump into how to mitigate these potholes. So we know what they are, but now we're going to discuss how to avoid those potholes and how to plan accordingly.
Okay.
So the first we want to start off with a couple conversation. It's like a business health checkup. We've heard this. You've heard the saying, "Inquiring minds want to know." Investor and lender diligence. These are what investors and lenders are going to be looking to have from you, and how they're going to make a decision to evaluate you as a potential client. So part of the business health checkup, one is the company information request. So here we're going to look at from a financial statements. They're going to want 3 years historical financials and year-to-date financial statements as well. And there's a couple of different quality of financial statements, if you will. Company prepared financial statements, or the company does themselves, and then you engage with with an accountant or outside CPA to either prepare compiled, reviewed, or audited statements. Um, the audit is the most expensive, but it's the most thorough as well. And typically, loans over $3 million will require reviewed financial statements from a CPA. And so, one of the questions we get a lot is, "Hey, John, if I haven't been in 3 years, how do I prepare financial statements?" Great question. If you're a little bit newer than 3 years, you really have to lean heavily on your business plan, on your forecast, in your strategy for your business in terms of how well researched it is. We'll discuss a little bit later, just as it relates to your pricing, to your competition, and your customers. So you're going to lean more heavily on that. That means that it has to the bar on that is a lot higher in terms of being very thorough. Other information may ask, company information would be tax returns, 3 years, financial forecast with assumptions over the next 3 to 5 years. And its key is with assumptions. It's not just a spreadsheet for each line item in the balance sheet, in the income statement. You should have a narrative of assumptions that you're using there. And ideally, these are financial assumptions, so you've got some financial data and research to support that. And then the business plan, which is your strategy paper. So here you're going to want to discuss the market, your competitors, your pricing analysis, so the investors know and lenders that your pricing is on point, you're not leaving money on the table, and you're not overpricing to where no one's going to buy your goods or services. And two questions to ask, real big one here is, why should your firm receive any capital, equity, or debt versus other firms? So again, you have to differentiate yourself from the competition here. And the way to do it is with the assumptions that are well researched and a thorough business plan. When you get the investor or lender nodding their head at a meeting like they've actually learned something, so when you're teaching them something at this phase, even though they think they know it all, that's a great point, and that's a feather in your cap moving forward.
So John, so to
Yes.
go back to that slide, um, with regards to the business plan then
Mhm.
and the financial forecast should almost kind of be hand in hand based on the business plan strategy. Then my financial forecast is going to support that business plan with regards to growth or with regards to development of a particular product line. Is that a correct assumption, or is that
You hit the
correct?
nail
Or
on the head there, Marie. Yes, you did. So there should be a direct alignment between the business plan and the financial forecast. They should reinforce one another. In some cases, the business plan, I mean, the financial forecast could be part of that business plan, if you will. But
okay.
again, all those assumptions have to reinforce one another and align. And so they're
And
going to
so
look,
would
yeah, go ahead.
so would you say that particular industry areas like that involve heavy capital investment like manufacturing or
Mhm,
construction or R&D if somebody's in the world of
mhm.
cyber, is that I'm going to say it. In my mind, that would be something very critical for the business owner to make sure that they're correlating that into their business plan so that the finance firm, knows that the business owner has thought about all of the different
Mhm.
nuances with regards to their growth. Is am I on track with that, or is that it's just standard across all of the industry areas?
No, you are definitely on track. I think the potential investor or lender is going to look at this and try to poke holes. Does everything align from the business plan and strategy to the forecast?
Okay.
And then one way as the business owner can help reinforce that if they can get third-party validation for the
Okay.
assumptions. So, for instance, if you know what the competitor is doing from a pricing and in the market, you can understand, you can even pull your competitor's pricing into your business plan. And the question would be then to confirm that you can deliver that product or service at the same cost. Um, uh, to your customers or lower, or you can add more value for the same cost that the competition is paying now. So knowing your competitors' pricing shows a level of sophistication that
Okay.
that the lender and investor want to see. And again, it's a point of third-party validation of what you're doing. So if we talk about whatever your market is, your market size, the market geography, the number of customers in your market, how's it bifurcated? How do you fit into your market as an entrepreneur and your company? So if you can stratify that by doing some research and documenting that, putting that into the business plan, again, that shows more sophistication that yes, you may have a huge market, but you're going to be wherever you're going to be focused. You can swim in that lane in that segment of the market, and you can outcompete your competition there,
Okay.
and so that's very important.
Okay, that it's not just pulling everything together. The business owner really needs to make sure that there is synergy with the financial forecast and the business plan, and that they're keeping their end goal in mind, which is basically is getting more capital
Right, to grow your
in
business,
things.
correct.
Yeah. Okay, awesome. Thank you.
Sure, you're welcome. And last point I want to make here is you mentioned the um, construction industry, just an example of an industry. So, for instance, you should already have, or what is your bonding capability per contract and overall bonding? Obviously, you have to be bonded in that industry, and that can be a barrier to entry. So, you want to be able to have that documented that what you've been approved for. If you have
Okay.
insurance, if you have that in place. So again, that's a third-party validator of your business that's saying yes, they can get insurance and they can get bonding.
Okay, great. Thank you.
Thank you. And if you're going to include anything like joint ventures, teaming agreements, mentor protege, all that goes in the business plan and forecast as well.
Ooh, okay.
This is the execution. Kind of hinted a little bit, but the execution is who's going to do the work to execute the strategy. Well, you asked a question earlier, Marie. The investors will invest in the business strategy, the numbers, the balance sheet, as well as the team. Um, do you have the team to execute the strategy? So who's the management team and key personnel? What are their resumes? What have they accomplished and done? And do you have any strategic partners or joint venture partners? They could be a joint venture partner to go to market, or it could be a strategic partner that you're using, um, you someone else's software, for instance, or maybe they have key personnel that can help you deliver your product or service. So this execution plan is very critical as well.
Do they oftentimes ask how much skin the owner has in the game, with regards to, are you putting in your own money, or are you solely looking at profits and then putting that back into the business?
Mhm.
Um,
Yes,
it-
that is a critical question that will be asked. is
Okay.
what are you investing in your company? So there will be the whole statement about skin in the game. How much money? What's the size of check? How are you funding your business? What's your investment in the business directly in cash? And there could be some other types of in-kind contributions that you're
Mhm.
making to your business as well. You could have some intellectual property, for instance, that you're donating, that you're making a contribution to the business as well. You could be bringing in strategic partners that based upon what you're doing, your track record, that they're going to partner with your company as well. So be
Okay.
you a startup or small business, startup or middle market company, what are you investing in your business is a great question. So you need to be
Okay.
prepared to ask that.
Okay. Great.
Right. As we move forward with the company business health check is what's going to be also important here is the quality of the information and data. So again, a way to help enhance your opportunity from getting capital from an investor, whether you've been in business 20 years or middle market or small business, is the quality information and data. So who is your CPA firm and accountant? Who is your attorney? Who is your financial planner and your wealth advisor? All these individuals should have a sense of making a contribution to the financial documents that are being offered, um, so that the reader, the investor, the lender can have more confidence if you didn't just prepare them, but your CPA firm did, or in certain narratives of that you've had your attorney look at letters of intent, business contracts, etc. And for your own question about how much can you afford to put skin in the game, who is your financial planner, who's your wealth advisor, and how have you engaged them here as well? And two things to think about, kind of a self-assessment is, can you or your company survive a background check? Be prepared that any investor is going to do a background check on the company and on you personally, and maybe even other members of the management team. So you need to look yourselves in the mirror. What else is out there? If there's some things that are out there you think that may be a challenge, bring those in up front after you're making the introduction, and then talk about how those situations have been mitigated and you're still a good investment. And lastly, just think about, would you qualify for a security clearance? Again, another thing to think about just in your background as a self-assessment. So all these things wrap up to become the business um, health check to make sure your company is ready to go and has the quality and the type of information that investors will ask for. Now we get to the personal financial health checkup, which is very similar. Um, is one personal financial statement. Again, is your personal house in order? You may be asked to complete a personal financial statement, or do you have one now? If not, even outside of the exercise of your business, you should develop a personal financial statement for your own financial planning in your own individual wealth growth. So one thing to think about a first financial statement is, what is your debt ratio? How much debt do you have to the income that you earn? That could be everything from mortgage debt for houses, revolving debt for credit cards, car loans, etc. What's your debt to income ratio? Um, what do your assets look like? And how much liquidity do you have? Assets could be assets that you own. Liquidity are those current assets that are cash, and investments, and other assets that you could gain access to fairly quickly. Number two, be personal tax returns the last 2 to 3 years. And you should already know this, but calculating this is your monthly household and annual budget and what is your cash burn. So either you're starting off your business with a small business, or you've been in business 5 or 10 years, you're still going to want to know um, how much money does your household need to survive in that annual budget. That's going to be important to know because the investor and lender is going to make sure you can keep your personal finances and your business finances separate. Part of what is your house in order would be just looking at credit score, and what's your credit score trends that lenders and investors will use this to be gauge of um, how um, how well you pay money back. Are there any outstanding issues there? Um, I don't personally like to put as much weight on that, but a lot of investors and lenders will. Second question to think about, number five, is, are you willing to pledge a personal guarantee as a condition for business capital, be it a loan or the capital? The investor may want you to pledge a personal guarantee that if the loan goes south, you have to guarantee that you're going to pay it up, or you're going to put some of your assets up to pay the loan back. And the last one is, what is the amount of investable cash and assets and securities that you have? These could be liquid, but also certain investors, you can actually take a margin loan on your securities or your liquid assets. That meaning that if you've got personal assets, a couple $1 million, let's say $1 million, you may be able to get a loan in your personal assets, let's say up to 70 to 80% of that on those personal assets. You just have to hold them in account, but you can get a loan on that as well. Again, that's leveraging your own resources, and in essence, you're paying yourself back. So these are kind of some things to think through about your personal financial house in order. And again, as it relates to your tax returns, attorneys, CPAs, etc. Very similar questions here. Again, having independent third parties here help you think this thing through, who've helped other businesses, is very critical to you. And also, this is a way for you to assess the ability. Do you have the right accountant or the right attorneys or the right wealth advisor if they can help you think these issues through with your business plan and to looking for capital? They should have a network where they can help you. And maybe if you don't think you're getting good advice, maybe you have the wrong lawyer, CPA firm, or wealth advisor if their network doesn't, if they can't help you in this regard, either with some introductions or just some good advice. All right, so moving forward, as we start talking a little bit about loans, um, uh, we want to also talk into why are loans denied, as we kind of some more potholes that we want to miss. So again, we have the same bifurcation between small businesses and mid-market companies. Some overlap here of poor credit history, meaning you haven't paid back other lenders, either on the personal or the business side. And so why would someone loan money to you if you have a history of not paying people back? Again, there could be some extenuating circumstances here. So you should have some mitigation reasons why. There's some very good reasons why. Um, Insufficient cash flow. Do you have the cash flow to pay back the loan? Lack of collateral from a small business standpoint. Um, just maybe lack of collateral, hard collateral that the lender feels more comfortable with. Um, Limited business history, track record. Haven't been in business that long. Maybe the individuals have been successful, but not have a strong track record as a company. Risky industry. There's some industries, restaurants, some retail, hospitality, etc. Not to mention, you've got cannabis, you've got gambling, etc. That some lenders or investors may not want to enter into those industries, or they may put a higher risk premium on them. And the last one here in the small business is poor application information. Again, the lender or investor is going to want to ask you for several items. Make sure you give them everything he or she asked for up front when they need them at one time. Don't piecemeal them, because if you piecemeal them, give them 80 or 90% of what they want, then the other at the tail. That puts you kind of in the second tier of a stack and raises a red flag that you don't have your information systems and processes together enough to present a quality package to them. So have that information ready to go. In a middle market,
John,
very similar. Yes, Marie.
before you go into the middle market business, from the small business person's perspective,
Right,
I've just started my business.
right,
I'm leasing space,
right.
for the business that I have. And so this goes to your point number 4, the limited business history and
Yes.
track record. And I've invested personal funds.
Hmm.
I put up my house as a
Right.
guarantee, or I'm willing to do that. Um, Is that enough to placate a financial officer, or when you talk about limited business history, do they
Yes.
know? I mean, I would think that they would understand, hey, I'm just starting this business.
Right.
I've got my blood, sweat, and tears into this
Yes.
business to make it go. And so how do I alleviate any kind of concern that a finance person may have when it comes to limited business history and my track record? Because I just opened my door.
Great question. Can we hold that to a little bit later in the presentation? We
Yep,
get to the type of
yep,
lender, type of
yep.
investor.
We sure can.
Okay, so please put a pin in that, footnote that,
Uh,
circle that, and
all right,
you
got
know,
it.
with your green highlighter, so to speak, and we will
Yep,
come back to that. Yes,
all
we
right.
will. It's a great question. Great question. And for the middle market businesses, very similar with credit history. In certain industries are viewed to be more risky. And again, here, more mature businesses, what is your current debt load? If just concerned about being able to pay back the loan, and that ties into insufficient cash flow. So these are some of the reasons that loans are denied, and we're going to jump into how to mitigate some of these as well. Okay, so the last thing here about the diligent deep dive, just wanted to share this page, and I believe the presentation will be available for you later as well. But these are some of the types of information that, from a diligence perspective, that lenders and investors will take a look at everything from customer relationships, client customer relationships, sales pipeline. Who are your customers? They may want to look at types of contracts. If you're younger or newer, um, any type of documentation you could get, purchase order, contract, letter of intent, etc., will be very helpful. Looking at your sales pipeline, how you create your sales pipeline going forward, that'll be part of your financial forecast and your business plan for your customers. If you have license agreements, if you have patents, please don't put those in there. Understanding you understand your revenue by client and your margins and profitability, thinking about who your principal shareholders are in your company. Do you have a board of directors, uh, board of advisors that can um, that can help you grow and scale your company and help round out everything your management team maybe doesn't know? There's some blind spots there. You can you can have an advisory board or have a board of directors as well. So these are just a few items that they're going to ask about in terms of arbitration and litigation as well. So Marie, great question before. So lender overview. So I wanted to give you a sense of the ecosystem and weave together the various types of lenders that we have in the marketplace, so you understand who you're talking to. And so these are all for debt. So we'll start off just a quick overview with banks. You've got bulge bracket or national banks, be they J.P. Morgan, Wells Fargo, Bank of America, etc. We have more regional banks. Here in this market, you'll look at a Fulton Bank, maybe like an M&T, uh, Eagle Bank, etc. You have community banks, a little bit smaller. PNC, for instance, I put more of a national um, or a super regional bank. And so those are the type of banks that you have. And one thing to think about there with banks, we think about just being aware of just the macroeconomic issues. We understand some of the challenges with commercial real estate that some banks have been having. That's been discussed about the last 18 to 24 months. There's Silicon Valley Bank that was focused on those type of investments, venture type lending. So just be aware of that and what's going on in the business world and the economy and how that may impact the bankers you're dealing with. Credit unions are also lending money to businesses. So a different type of, I grew up, my mother was a teacher. We had a credit union. You got you got your home, boat, auto, a couple things. But credit unions have really expanded now to business loans. It's another type of lender. Micro lenders typically lend loans $50,000 and under, but there's quite a few micro lenders in the market. They may stretch a little bit more for you than some of the banks. You have private debt mezzanine lenders. These they'll lend debt, usually the larger debt, maybe more focused on middle market companies or larger small businesses. But there are firms that focus on debt and mezzanine debt to businesses. The cost of capital can be a little bit higher, but they can be very competitive as it relates to banks and credit unions in that space. Accounts receivable factors, and most businesses are familiar with factoring. That's not something we always recommend, but you do what you have to do certain times. So having a relationship with a good factor, particularly in this area from federal government contracting for all these lenders, make sure you have a lender, not just an institution, but a lender that is well versed in federal government contracting, understands that. Marie, getting to your question about startup companies, Focus on submission-based lenders, which could maybe be micro lenders, but CDFIs and CDCs. Um, CDCs are certified development corporations, and CDFIs are certified development financial institutions. Both these are mission-based lenders, meaning they want to loan money to businesses to help grow the local economy in their cities and in their counties. So there's an economic development lens here a little bit. So they will, from time to time, stretch a little bit further. So you asked about a startup business doesn't have the 3 or 4 years of track record. You still have to be very prepared. But working with the CDFI and the CDC, they're a little bit mission-based lenders. They may be helpful. I'm chair of the board of directors of a local CDFI and CDC now, and we were making restaurant loans during the pandemic, and so the loans
Okay.
have been performed very well. And so that's just an example of most people wouldn't think about making a loan during the pandemic. But again, these are mission-based lenders who really take to spend the time to get to know you as a CEO and entrepreneur in your business. And then lastly, high net worth individuals, from the accredited investors to institutional investors. This means that they have the personal net worth and the income to invest in private companies. So those might be folks within your sphere of influence, within your network as well. So this is just an overview of the type of lenders that are out there. Um, I did not mention the Small Business Administration, the SBA. Banks and credit unions and some of the mission lenders will offer the SBA loans of 504 or 7A, typically through their own programs as well. So they can become SBA lenders, and there's USDA, and there's other government guaranteed loan programs as well, federal government. And
Great.
so, again, your state may have some of these as well. Did you have a question, Emery?
Nope. Mm-mm. That
Okay, so
was
this is
great.
kind of a broad brush overview. Feel free if there's questions to send those in. We could go more in depth, maybe with your particular company and circumstance as relates to find. But the idea here is to find the right fit for you and your business.
Right. So John, go back. Yeah, go
Oh, go back
back
up?
one.
Sure.
Yep, go back up one. Oh, yep, that one. The debt
Mhm.
one. So I'm a small business owner, and
Yes.
let's say I'm commodity based. I've got a business, but then I
Correct.
also have a passion around SIBR or SBIR in some
Yes.
social circles. So
Hmm.
I have two things going. I have two basically lines, or I'll just say, avenues that my business is
Hmm.
undertaking.
Yes.
Um, how, which, this is, which type of lender is more apt to be responsive to SIBR or SBIR
Mhm.
investing? Or is that a whole total different session that we need to get scheduled?
Yeah, well, yes, that could be because the SIBR program is different from each federal agency, but I would say at large, because you're dealing with innovation, you're dealing with technology. Um, I think all these lenders are going to want to see to understand, are you at phase one or phase two, kind of how you've come through those different phases. Um, and then after you complete phase one to phase two and phase two to phase three, then three, you're supposed, focused on actually
Right.
the commercialization of your
Yeah.
product or service. I think they're going to still want to see that solid core information of your business plan, business strategy. Being in the SIBR program is fantastic because that's a third party validation of what you're putting together of your company, um, and its strategy. So being awarded a phase one or phase two grant is fantastic. Ideally, in the more the phases you've been awarded, kind of going through the program, meaning you've made it from phase one to phase two, that the agency there has reviewed the work in phase one and wants to validate that with a phase two and similar to phase two to phase three. So I think going through that progression makes a lot of sense. I think it's just going to depend upon the individual at these institutions here, quite
Yeah.
frankly,
Okay.
um, in terms of whether that's going to be a good fit or not. Again, if you look at some of the mission lenders that have kind of a economic, perhaps development focus as well. So kind of think about, are you, um, does this technology is coming with potential to add jobs as well? Um, and I think with the innovation and the technology, um, all these institutions are looking for. I mean, that's just the trend we are in our
Yeah.
country right now with crypto, not crypto, excuse me, cyber, AI, blockchain, et cetera. You can
Hmm.
even take more mature industries and companies that are now applying those technologies to their industries. That can be a disruptor in the marketplace, be it
So this
construction,
really,
manufacturing. Yeah.
yeah.
So I think all these could be very focused on that. I think it's
Okay.
you communicating to them the value of that SIBR, the program, the value of that technology or product or service that you're creating to the marketplace.
So it all goes back to your first slide is getting to know or knowing your banker or your financial institution, your financier, and
Right.
having that relationship so that it they're aware and then they can say, thumbs up, we do that, or no, we don't. You may want to go over here for that type of financing or whatever.
Correct. Right. And so, for instance, you've got places now like Silicon Valley Bank. I'm not plugging them. They had their
Yeah,
troubles. They were partially taken over a year and a half ago. But my
yeah.
understanding is they're back in the market making loans again, kind of leaning more on that innovative company type perspective, disruptive
I see.
technology in the marketplace. Um,
Okay.
I'm not endorsing them. You can go and research this. I'm familiar with other banks. I'm just not going to mention them that have, for instance, in this region, a lot of life sciences. So they have a life sciences dedicated team. Historically, we had you've had a CNI team, commercial and
Okay.
industrial companies. You'd have a nonprofit, focus, nonprofits, universities, etc. Healthcare may be falling there, but a lot of
Mhm.
banks now have a life sciences, particularly in this area vertical within it. They have a life sciences team that's in the market. So those are more innovative, IP driven
Okay. Oh,
type of companies. So they may be more apt to look at cyber at large
yeah.
because they have an institute, part of their bank or institution is focused on kind of the innovative, in this case, life sciences space. So I would look at the institution and seeing what they're having to offer. And again, you're interviewing these institutions and these individuals as well.
Okay. That is
I mean, you're
that's
interviewing. I
a
mean, we think
great
about, oh, we're going to
comment.
them because we need a loan. Well, that individual needs a. I mean, as a former lender, I was
Right.
at Comerica Bank and Fifth Third Bank in my career, so I made money by trying to identify companies that I could take from another bank, or hey, who's a new and upcoming company that's not quite middle market, but hey, I can go out. And I could get them instead of my bank. Hey, Marie's got a great company, good team, not quite where we want her to be now from a size or scale, but they're on their path to get there. We need to get them now, build loyalty to them as a team. If we wait a couple of years, everyone will be coming after them. So you have a lot of
Wow.
value as the entrepreneur CEO. Know what you bring to the table.
That is a
They need
great
you
that is a
to
great point,
grow.
John.
And as a loan officer, I needed you because I have numbers to hit every year, right? So I need to
Yeah.
meet you. So this is a two-way interview. So don't think you're going in hat in hand. And the last thing I would say here is we'll talk about a little bit in the next session about accessing capital, but kind of a teaser is what are you bringing them into the table? You're
Hmm.
bringing them, if they're a smart and they're a good lender, they're going to want your business. They're going to, your business as a company. So they're going to want to make you a loan. Maybe there's a business credit card. They're going to want to offer you online banking and all sorts of treasury services. They're going to want your accounts, your business account. They're going to want your payroll accounts too. So when you go to them, think about the totality of the relationship. It's not just I have a line of credit for my working capital. I have a term loan, some other debt to buy some equipment or commercial mortgage for my building to build it out, et cetera, or for leasehold improvements. Think about all the payroll you're running through them every month. You pay your people twice a month. All that payroll runs through them.
That
So you
is
bring a
a
lot to the table than just so you don't walk in hat in hand. They need you, and
that
you need them as
is
well, obviously. But
amazing.
yeah, it's not so you're interviewing them.
That's the golden nugget. That is one of many golden nuggets
So
that we've
yeah, so
gotten
think
so
about that
far.
yeah, yeah. No, you're right. So think about the
Yeah.
posture and the confidence when you walk someone. Oh, just don't say, "Oh, I'm just a small business." Oh, I just started. Say, "No, I'm a business. We do X, Y, Z. Here's where we are. Here's where we're going. Here's how you're better than our competition. And I'm looking for a financial partner that I can lock with arm in arm to meet my needs now and meet my business and my personal needs as well. Because if you make more money, they're going to introduce you to their private banker, right?
Yeah,
You've got a
that's
house here,
right.
maybe you want a new house. Well, they want that mortgage on that. Maybe you want a house in the Eastern Shore. Maybe you want one, going up to the mountains someplace in West Virginia, or wherever you want your house, your second house. Maybe you want to be the beach in Delaware, Virginia Beach. Well, they're going to want that too.
That, John,
You're
you have
making money.
just
Where are you going to
opened
invest
a
your
whole
assets?
new venue, right? You've
Yeah.
just
What about a
opened.
retirement plan? What about a 401k plan for your company as you grow? They're going to want all that. Well, if they're going to want all that, they need to meet you where you are now, and you need to, there's no reason to put that out there. As you start to meet them and get to know them, hey, here's here's where we are, and here's where we're going
Yep,
to be, and we're going to team that can offer. Does your bank have a good private banking partner? I want to meet them.
I
You may
love
not be
it.
in a position for that for a couple of years, but again, you are qualifying them. The best banks I've seen, they'll bring to a meeting their the lender you may be working with, they may bring someone else from another part of the bank. They could bring someone from the wealth management side of the bank, or someone else, their treasury team, or some other people, because they see this as a full relationship.
Right. I love this. This is amazing. And I think we have a series 6. Actually, I'm going to just say SIBR SBIR, as
No,
we'll have to highlight that one for a future too.
no, we can
So,
do that kind of that innovative space and how to qualify. But the initial kind of one thing would be to look at, again, I'm not going to mention anything, I'm not plugging anybody, but there are banks in the market that have separate life sciences types of lending units, and how do they lend to innovative companies? Just ask them.
cool. All right, we'll leave that teaser out there for everybody. So,
Yes.
okay.
Yeah. I think for equity, I think it's similar. Just quickly, there's equity, private equity. Private equity simply is an organization or an institution or a firm that has a fund that's investing in your business. There are different types of private equity funds. Some focus on small companies or small caps, some middle market, some large. You need to know if you're a small business, find a private equity firm that focuses on small businesses. There are private equity firms that focus specifically on the federal, I call it GovCon, but the government contracting space. So you need to identify those. There's within private equity a venture capital that's going towards more the innovative, um, the end of it, where you have a disruptive company with a technology or product or services. There's a group here called family offices. High net worth individuals will set up a family office to invest their tens of millions, hundreds of millions, of billions of dollars. They will have a team. So there's family offices. There's a lot of wealth in the DMV. So identifying family offices. Crowdfunding is a way through the SEC to raise money for your business investors. You have a lot of individuals do that. So look at crowdfunding. Angel investors would be typically individuals, a subset of high net worth individuals that will look to invest in innovative companies and technologies. And the big one in the middle here, from an equity standpoint, could be who are the strategic businesses within your sector. My joke to a lot of companies when I was as the OSMA director, Marine Department of Energy, was a lot of large businesses. They grew and got more innovative by setting some money aside. Mergers and acquisition, they would buy smaller, more innovative firms. Right?
Mm-hmm.
You start your business, you're a small business, you're really innovative. Hey, someone may come up to you and write a check for you and say, "Hey,
Yep.
we'll take everything," and you'll negotiate that price. But there are strategic partners within your industry sector, or think about an industry vertical that complements your business, right? Where you can go to market
Yep.
with a turnkey solution. That's an opportunity there. There's a strategy there, and then again, high net worth individuals. Um, Everyone's got a rich uncle, I hope, or at least we wish we had a rich uncle that would invest hundreds of thousands and millions of dollars in business. Now, depending on your family and your uncle, maybe you do, or maybe you don't want that uncle. But and I guess in today's day and age, we'll say aunt too, because we know there's a lot of very successful
Yeah.
women. So you don't have an aunt and uncle that are high net worth that are looking to invest as well. So
So
those are
would
the
those be
sense
the
of who the
Shark
equity
Tank?
players are. I'm sorry, go ahead, Marie.
Would those be the Shark Tank peeps, the
Oh
high net
yeah, you
worth
think of a show
individuals?
like
Yeah.
yeah, think of a show like yeah, the
Shark
Shark
Tank.
Tank.
Yeah.
Yeah,
Yeah.
and I know of organizations and a lot of chambers of commerce and related organizations have kind of had many Shark Tank competitions. I've seen around town as well.
Okay, cool. Just
Yeah, but
throwing
no, these are
ideas
these
out to
these are
everybody.
individuals. Yeah, last thing I'll say here is the equity's not free. So if you want someone to
Right.
invest in your company, you're going to negotiate. You give me X thousands of millions of dollars, and what percentage or ownership or control of your company are you going to give to that person or that company or that entity? So realize you're giving up something here. So equity is more expensive than debt because equity, I mean, the debt just lends you money, you pay it back. No different than you know,
Yeah.
you get a mortgage on a house, commercial mortgage, etc. But equity, this is like a marriage, ladies and gentlemen. This is a marriage because they own part of your company. So
Yeah.
you really need to think through, is this what I want to do? There's pluses and minuses. And then if you want to do that, great. What are you willing to give up? And
Yeah.
this is a marriage. So you really need to get some expert legal advice, some accountancy. There could be some tax implications as well. So you need to understand that. So you need a good corporate attorney who deals with private equity or just commercial corporate law transactional work. They may want to make sure they have a good tax department with them as well. So you just need to ask those tough questions. And so all that means that it's probably going to cost you a little bit of money if you hire a good law firm, maybe maybe they have a tax partner or two with them as well. So it's more expensive, but if you get the sense to be prepared. You need to be able to spend a little bit of money here to figure this out. But again, you can really scale and grow your business. You can use this equity to buy companies. You can use the equity. You're going to buy a business. You can use the equity if you're going to really help to scale your business. Maybe it's another line you're going to start. Maybe you're going to diversify yourself geographically across the U.S. It could be across globally, and you need some more resources to build out a team to support that. All that's great, but just realize that you're giving up ownership of your company, and so you need to, and this is a marriage. So you
Right.
want to know how you're going to get in, and if things go south, how do you get out? And you're giving up some control.
Yeah. That
So
those are great pearls.
yeah,
We
they're
got
going to
more
want to sit on
gold.
your board of directors, and they're going to want to grow the company, make sure they get paid back. So
Yeah.
they get paid back by profitability and the value of the company going up. So you just need to understand that and their exit, how they want to get out of it. Are they going to ride with you for 8 to 10 years, or are they going to want to flip their equity and they want to get out in the next 4 to 7 years or 4 to 6 years?
Yeah.
You just need to understand that.
Wow.
And as they say, govern yourself accordingly.
John, a ton of golden nuggets you have tossed our way so far. Wow,
Yeah.
this is great, and this is only number one. This is only
Number one, yes. Yeah,
session
I'm
one.
excited.
Wow.
You've got me just contact information for us. I'll just stop sharing now. I'm just going to say that you've got me really wound up here as we look forward to going into session number two. But now we laid the work how to get over some of these pitfalls. Now we're going directly as how do you accessing that debt and that equity. What are these investors, equity investors and lenders looking for in return, and may put you in a position to win. So you're shopping them, but they're not shopping you.
John, this has been fabulous. I cannot thank you enough, and I'm so jazzed for the session number two.
Well,
So
I'm looking forward to it.
I can hardly wait. So
Yes.
with that, everyone, I'm going to call this a wrap, and I'm going to say ciao for now, and stay tuned for session number two.
Yes, and if you have any questions, please send them Marie's way, and we can address those either email in between, or maybe start the next session off with a couple questions, and hopefully we have some good answers for you.
Okay, take care, everyone.
Thank you. Have a great day.